Good morning, everyone. I am Stephen Haas, Head of Credit Trading at Amerivet Securities. Welcome to Talking Tuesdays. Last week, the new issue calendar fell short of weekly expectations, as broad market volatility in both equity and credit markets caused a sell-off and halted new deals on Thursday's session. The week saw $25.85 billion of new supply that was expecting $35 to $40 billion. Fund inflows exceeded $9 billion for the second consecutive week. The demand, along with a dip in new supply to just $25 billion versus the $35 to $40 billion expected, translated into strong order books. We ended the week with no deals Thursday and just 2 deals on Friday. Investor demand in credit continues to be very strong in the new issue market, but last week's backup and sell-off in spreads saw net client buying of $2.7 billion. Spreads on the week in financials pushed wider across the board by 10 to 35 basis points. Last week, we saw net client buying of $2.7 billion that was heavily weighted in financials, technology, healthcare, utilities, and materials, while industrials, consumer staples, energy, and communications saw net client selling of $576 million. The bulk of net client buying in credit was seen in the 0 to 3 year and 12 to 30 year maturities, with 7 to 12 year and 3 to 7 year maturities seeing net client selling. Federal Reserve Chairman Powell is set to bring a sobering message to Capitol Hill today that's expected to echo a largely downbeat assessment he delivered June 10th. Powell will testify at 10 a.m. today and at noon on Wednesday before separate committees. Inquiry on the desk continues with a buyer of 5 to 10 year high-quality paper along with long GM paper. Last week we traded GM 540s of April 48. Please contact the desk for details. As we begin the week, spreads reversed the early morning move wider yesterday and ended the day tighter as stocks rallied. I am Stephen Haas. Thank you for listening to Talking Tuesdays.